Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well, current analysis will not be as action-packed as previous one, since it's not a lot of different patterns forming currently on the market. That's why we probably just will discuss the potential pullback that could happen on the daily time frame. Also, I suggest that you better to visit our forum and read the weekly analysis as well, since monthly and weekly time frames contain a lot of significant moments that could be crucial for medium-term perspective, for a bit bigger picture than daily time frame. On the daily time frame, we have in fact only single question. Since we have significant bullish context on all time frame and upward bias holds on the weekly, on monthly, on the daily time frame, so you can see this really thrusting move to the upside. The major question currently is, if retracement will start, how deep it will be. Because to enter long right at this point on the daily time frame is not very wise decision, since you could see that market first has hit the daily overbought with this area, and now market stands at the completion point of this pattern. A, B, C bottom, 133.50 is right here. Slightly higher stands the monthly pivot resistance 1, it's 133.80 area approximately. Although in general euro currency is well traded currency pair, but and very often when it stands in a solid trend, it shows shallow retracements. But we now stand at overbought as well. So the hitting of the overbought level could suggest a bit deeper retracement rather than just the nearest level to watch for. So on the daily time frame, I see we could make only two possible suggestions, such assumptions, because you could see market just hit this level, and in fact it had no time to give us any beacons of the potential pullback, since it hasn't even started yet. One potential retracement that could happen is right here. Take a look at this red clone line. I have taken this shallow retracement, previous retracement, measure it, clone it, and drag to this area. You can see that if market will take just this retracement, it will show a pullback to the first 3/8 support area, from that low to that high. 3/8 fib support is 132.25. That it will be also stand close to the weekly pivot point of the common week, it's 132.41. And the harmonic, the minor harmonic swing, this shows on the same area. But since we at overbought, we can't exclude the potential pullback a bit deeper. If we will measure deeper retracement that market holds twice within this current move to the upside, then we will get the potential target of this pullback is around confluence support on the daily time frame. It's 131.38, 131.78 area. It's right here. That area stands very close to the week, monthly pivot point and weekly pivot support 1. Also, if you'll take a look at the oscillator predictor, this band's blue line, very often when the market hits overbought or oversold condition, the minimum retracement gravitates to the area between the bands of the oscillator predictor. That is, by the way, the 0 point on the trended oscillator. You know that. We have discussed it on the previous week when we have talked about the stretch pattern. We said that minimum target probably will be somewhere around 0 point on the trended oscillator. Now if you will take a look at this distance between the bands, this is the upper band, this is lower band, the medium point stands precisely somewhere around this area. So I think that a bit greater probability that market will show deeper retracement than just 132.25, but that is just an assumption. So we will have to keep an eye on the potential development of that retracement. We will have to keep an eye on potential patterns that will be formed within this retracement, maybe some sort of the ABCD patterns or some others that could let us to better understand how deep it could be. Maybe we will get some agreements. So, and probably we could say that yes, market probably will stop right here since we have the ABCD agreement with the weekly pivot point in this level. Well, who knows? Currently, it's impossible to say something more definite. Just two levels to watch for. They are confirmed by not just by fib work, not just fib support levels, but this is also significant pivot points, and that is also the potential target of the harmonic swings. That's why they are important. But another moment that I would like to discuss with you is a bit sophisticated nuance that is forming currently on the 4-hour time frame, and particularly it is related to most recent ABCD pattern. So if you'll take a look at the daily time frame, you could see this: A, B, C bottom, D point. So let's shift to the 4-hour time frame. Here is this ABCD pattern, and the important moment is that the target of this pattern stands at 134.30 area. That is beyond the level of overbought, and that is beyond the level of monthly pivot resistance 1. So how it will turn? Will market creep with the overbought to hit this target, and only after that will show some pullback, or it will show the pullback right now to the minimum level and then continue move to the 134.30 before starting move to the downside? It's very difficult to predict, but this existence of this ABCD pattern tells us that if market on Monday suddenly will continue move to the upside, don't be hasty to enter on the long side of the market, because that could be just acceleration to the target of this most recent ABCD pattern. If this will be the case, and if market will stop right here and turn to the downside, you could be trapped in the wrong position if you will jump in just blindly on the daily overbought very close to the target of this pattern. I don't want to tell that it has to happen, but this is really possible because market hasn't quite reached the target of the most recent ABCD pattern, and that is the risk, the potential move to the upside, despite the fact of overbought. Market could, for instance, starting to form some small candles to the upside and creeping with the overbought, as we know that could happen on the market, and we have seen this previously many times. Well, but the conclusion that we could get is the upward momentum is strong. We have the bullish bias on almost on all time frames, somewhere a bit stronger, somewhere a bit not so strong, for instance is on the monthly time frame, but still we have all trends are bullish on all time frames. That tells us that probably we have to search the possibility to enter on the long side of the market. But currently some sophisticated moment is that market at overbought and the completion point of some extensions, as weekly time frame extension, as daily time frame ABCD pattern. That could lead to some pullback. Anyway, the pullback is preferable to enter, since it's not very good idea to enter right at overbought condition. At least I think that's my way of thinking how it's better to deal with current situation. And finally, keep an eye and be careful with the most recent ABCD pattern, since market could show some splash to the 133.80 134.30 area before we'll start any pullback to the downside.